Hello and welcome. My name's Andy Crook and I'm your host for today's training topic on the profit and loss statement. Every week I go live with the aim of helping garage owners become more successful in business. Today's training topic is the profit and loss statement. The profit and loss statement is a financial tool that summarises a business income and expenses, allowing owners to gauge its financial health and make smart financial decisions. So the profit and loss statement is one of the, if you like, the most important financial statements that you use in a small business. And understanding the profit and loss statement is critical, if you like, to know your numbers. And if you know your numbers, you know your business. And that's the sort of the theme, if you like, around a series of trading topics I'm going to do over the coming month on the key financial statements. So that's where this sits in amongst all the other training topics. So I'm not a bookkeeper, I'm not an accountant, so I don't have any of those qualifications that deems me competent to talk about these from a point of view of giving financial advice. But what I am is a business owner that looks at the profit and loss statement. And what I'm going to cover is three key things about the profit and loss statement and how I use it in my business and maybe how you could use it in yours. Is the first thing the profit and loss statement allows you to do is to understand revenue and expenses. And then it can look at whether or not you're making a profit or a loss based on that understanding. And then what you can use the profit and loss statement to do is to look at trends and use it for periodic reviews. So that's the key information that we're going to cover today. We're also going to look at something which is a little bit unusual when we're talking about anything really, is we're going to talk about what's not there, what's not included in a profit and loss statement, and why that's important and why you need to be aware of it. And then finally, we're going to hopefully give you some action points to go away and do. But basically, what the key theme of tonight's training is about knowing your numbers to know your business. And I'm going to give you some numbers that you could sort of give you an idea of what you should know off the top of your head at any point. If someone asks you, you should be able to reel these numbers off and where they come from on the profit and loss statement. So let's get on with the actual training. So the first thing we'll talk about is understanding revenue and expenses. So the profit and loss statement, often called the income statement, provides a summary of your business financial performance over a specific period. Now that period, depending on your accounting software or how it's reported to you, can be monthly, quarterly or annually. Now if you only look at your profit and loss statement when you look at the books with your accountant at the end of the year, then it's probably going to be too late to do anything with those numbers. You're basically, and I've done a training topic about this before, is basically your accountant is an historian. He's talking about things in the past, and we need to know what's happening here and now, and then we need to plan for the future. And to do that, we need to know the numbers. So the profit and loss statement, can be, it depends on your accounting software or how your bookkeeper presents the accounts to you. Should be at least, you should know these numbers at least monthly. You should definitely know them quarterly and annually. But I'm going to suggest that we should know them. The minimum period we should be looking at these numbers is a month, for every month. And what the profit and loss statement allows us to do is to show our total revenue, our sales and income, and breaks down your expenses, your costs into categories, and the better you break them down, the more accurate you break down the categories, the more useful the profit and loss statement can become. So you can have wages, rent, utilities, your suppliers, your different suppliers, break them down, and even more, break it down much, much more. In my business, because we have more than one revenue stream, we break down the different revenue streams in terms of their income. So we don't only break down the costs, we also, as cost centres, we break down the income into income centres. So you might look at, in another garage, you might think, right, well, if we look at the MOT part of our business separately, could we look at the income from MOTs? it's a fault, and it's something you maybe need to speak to your bookkeeper about. How can we break it down? The total numbers will always be the same, but how can we break it down and look at where our costs are occurring, and can we break them down a little bit more, and where our income is generated, can we break that down into cost centres and income centres? Possibly, it's definitely what I did to look at what we should focus on in terms of what is the most profitable activities within the business. And then what we can look at then is each of those activities have their own costs, their own income, and therefore we can look at them separately. It's an idea. We should also pay attention to the three main sections on a profit and loss statement. And the three main sections are the income, and then we have the gross profit, and then we have the net profit. And this gives us a clear picture of whether or not the business is making a profit or incurring a loss. And it's vital that we know the income, the gross profit, and the net profit. And it doesn't matter how we express those numbers. So some people talk about gross profit as a percentage of income, and some people talk about net profit as a percentage of income. It doesn't matter whether we look at them as a percentage or if we look at them in the raw data, in the raw numbers. We just need to know where we stand and over the period in which we're looking at it. So if we're reporting monthly income, monthly gross profit, monthly net profit, and then we can then know our average income, average gross profit, average net profit, and we can then instantly see whether the current month is average, better than average, or worse than average. But most importantly, we need to know on a monthly basis whether or not the business is making a profit or a loss. So, and that takes us neatly into the next section, which is the profit and loss. And so we've done training topics on direct and variable costs, and we've also done training topics on fixed and other costs. So what we can talk about when we talk about profit and loss is the gross profit is calculated by subtracting the direct costs away from the total revenue. And a positive number indicates a profit, while a negative number indicates a loss, which we really don't want to be a loss at the gross profit stage, trust me. And then we need to look at our net profit, which is calculated by subtracting the total expenses, fixed and variable costs, from the total revenue. So if you don't know what I'm talking about when I talk about fixed costs and variable costs, or indirect costs and direct costs, there's two training topics on both of those subjects. One on fixed costs, one on variable costs. Variable costs was only done relatively recently. It's worth looking those up if you don't understand those terms, because unfortunately, when we speak to people who do, such as accountants and our bookkeeper, they do use these financial terms, and we have to be familiar with them, and we have to understand the subtle differences between, for example, a direct cost and a variable cost. They're almost identical, but not quite. And understanding these tiny little vagaries really helps us when we're having a conversation with these people, because once we understand their language, we can start to talk to them on a almost equal footing. It's never going to be equal, because we're never going to know what they know, but we can start to understand and have meaningful conversations. So when we think about profit and loss, our gross profit should be a profit, and our net profit may not always be a profit every month. In fact, 94% of UK businesses had periods of negative cash flow in 2021. The average business had negative cash flow in 2021 for 4.5 months. I don't know how they worked out 4.5 months, but that was the average. So all this is all businesses up to small to medium-sized enterprises. So this is most garage businesses. So the UK average for these businesses, according to the accounting software provider Xero, in 2021, 94% of businesses had a period of negative cash flow during 2021, which is the latest figures I can find. And the average was 4.5 months. So if you're in in that position where sometimes, and what I mean by negative cash flow, so I suppose I ought to explain that, is when our net profit is a loss instead of a profit. So, and basically this is the bottom line showing if your business is healthy or needs improvement. So micro businesses and their owners should focus on this figure as it directly affects their ability to cover expenses and to grow the business. You can't invest in the business if you're not making any money. It's almost impossible. So it's that bit that I want everyone to focus on. It's, do we have positive cash flow? Do we make a net profit every month? Because if we are, we're in the 6% of UK businesses according to Zero. So I'm guessing most of the people listening, if that stat is true, have periods of negative cash flow. And we need to eradicate that from our business. Which takes us on to the last bit, which is the trends and periodic reviews. So garage businesses should regularly review profit and loss statements, ideally on a monthly or quarterly basis, to track financial trends over time. Comparing statements from different periods helps identify areas of improvement or concern. For example, if expenses are rising consistently, it may be time to analyse and control costs, which is what happened with inflation. If we didn't look at our profit and loss statement, we could trade for a long period of time before realising the serious impact inflation is having on our business and our ability to make a net profit. So what makes this sort of essential, if we're new to looking at these statements and we're thinking, well, I've got this far without doing it, you'll probably be missing a trick. Even if you're using profit first accounting and you know that if there's money in that account, then you're probably doing okay, you're not probably seeing the detailed bit that you can get from these statements. And we're not saying that you look at them all the time, but you have to have a periodic review. And I'm saying we look at them monthly, we look at them quarterly, and every year we look at them with our accountant. And we go to the accountant with our findings rather than waiting for the accountant to come and say, well, we've noticed this in your business, because he might not, or she might not. So what numbers should you know without looking? So I'm suggesting that we should know our average monthly income. So what is the average from last year, or our rolling average every year? If you just keep on averaging it out, what do we make, or what's our average income? Then what's our gross profit, our total expenses, and our net profit? And if we know those numbers off the top of our head, we can just instantly tell whether or not we're having a good month or a bad month. Now, if you want to be a little bit more micro in your management of the financial aspects of the business, you could break this down into a daily income and a daily gross profit, a daily expenses, and a net profit daily. And you can do that, but the way garage businesses work, and I suppose you could say, well, it all evens itself out in the end, but you may have a day where you get 4 jobs in and they're all going to take more than 1 day to finish, so there was no income. I know it's unlikely, but you could start to then panic, whereas if you do it at least weekly, might give you a bit better idea of what's going on. But, you know, some of the garage management systems will give you that number on the top, and you can see whether or not you're above or behind a typical day. And that's what gives you that ability to make informed decisions. So the profit and loss statement helps garage owners make informed decisions based on their financial performance, even with limited financial knowledge. You do not need to be a guru to know your average income, your gross profit, your expenses, and your net profit. So what's not included on a profit and loss statement? Well, the profit and loss statement focuses on the core operational performance of a business, revenue and operating expenses. Depreciation, interest and taxes are important financial aspects, but they are not reported on the profit and loss statement. They are reported separately. Depreciation is a non-cash accounting adjustment. Interest is part of financing activities, and taxes are influenced by various external factors, and the profit and loss statement is one of the statements that's used to calculate the taxes, so it can't be part of that statement. So these items must also be considered when assessing your business's overall financial health, but remember they are not included in the profit and loss statement's primary calculation. So that's what the profit and loss statement is about. That's how it can be used. That's the things you should know. So what's your atomic action, your takeaways from this training? Well, if you don't know, find out how many cash flow crunches or months of negative cash flow you had in the last 12 months. And use this as a starting point to discuss how to make improvements with your accountant or your bookkeeper. Remember ACDC for cash flow. Yeah? Attracting customers, converting customers, delivering and collecting. That's what ACDC stands for. We've done lots and lots of training topics on that. If you look them up, you'll find them. But remember, know your numbers and know your business. If you don't know already, go and find out and make it your business to know off by heart, instantly. Anyone asks, you just roll these numbers off your tongue. You must know your average income, your gross profit, either as a percentage or as a number, your total expenses and your net profit as a percentage or as a number. Once you know those, you'll know your business because you know your numbers. If I've made you think about how you run your business, then I've done my job tonight. If you've got any questions, send me a direct message or get in touch via the usual channels. My name's Andy. Hopefully that's been informative. Thanks for listening.